we're somewhere halfway with a shortage in coins building up until levels that was, exactly half of the levels and the shortage levels in 2017 and 2013. So I'm, from those two angles, pretty sure that we haven't seen the top yet.
Let's say we get to 285,000, then what happens?
We're somewhere halfway, and I'm very data driven, so I don't make that up, but I read it in the data. Of course, data can be read and interpreted in different ways, but I look, of course, to my stock to flow models, the stock to flow model and the stock to flow X model. And both models actually show that we're certainly not at the end of the cycle, that we still have some room to go until 100,000 on average, or 288,000 on average if you follow the stock to flow X model. If you look at the on-chain data, which is a treasure for making signals and picking up patterns, if you look at that on-chain data, it is very clear that we're somewhere halfway with a shortage in coins building up until levels that was, exactly half of the levels, the shortage levels in 2017 and 2013. So I'm, from those two angles, pretty sure that we haven't seen the top yet. Although, of course, I have to put in a disclaimer. It's all crystal ball here. Market should not be predictable. So either this on-chain data and the model gives some insights, or I could be wrong, of course. But for me, it's pretty clear. The people that have entered the market a couple of months ago, they're looking at 3, 4, 5x profits. And if you're in the Bitcoin market for a couple of years, that might seem like an obvious normal thing. But for a normal investor, a traditional investor that got in Q4 2020, that is an amazing thing to see 5x returns. So they will, they're human. They take the profit. They want to see if it's real.
Take the money and run, so to speak.
The shortage is real, and it's building and building and building. It has been building for months now and accelerating since December. The one thing that makes Bitcoin attractive for me as an investor at the time, and still, by the way, is its scarcity. The fact that there is only 21 million coins ever, and nobody can change that, can increase the supply. So the scarcity is the key thing that drives the value. Currently, it's tracking like a train. It's really unbelievable. But the most important thing that the stock to flow model is predicting is that that average value after a halving, which is $100,000 for the stock to flow model and 288,000 for the stock to flow cross asset model. But it's really that jump to those levels and the 4 years after that halving that are, for me, the most important. So the fact that it's tracking like a clock right now, I don't think it's a coincidence either, but the Bitcoin price goes up on average every year, and the beer consumption in the world, or the population in the world, goes up every year. So that's not very useful for prediction. But assets, for example, gold, silver, and later diamonds and real estate. And amazingly, what you see is that if you put stock to flow of all those other assets and of Bitcoin, and I took 4 clusters of Bitcoin that I interpreted as different assets. Bitcoin evolved as a proof of concept asset to a store of value asset to a e-gold asset, if you will. But if you look at those 4 Bitcoin clusters combined with gold, silver, diamonds, and real estate, those are also on a straight line. So I was very amazed to find that. We have an asset that has a stock to flow value of 60, that's gold, and we have an asset that has a stock to flow value of 100, and that's real estate. So we can predict the value of Bitcoin to be within those that range of values, so above 50, without extrapolating. We have those assets and those data points in our data, so we can just interpolate from the data that we have in there, and that makes it so much more reliable, because a time series model, well, we cannot see in the future, so we always have to extrapolate those lines, and that is less reliable. So yeah, which one does Plan B prefer? And that's of course the stock to flow X model, the $288,000.
Let's say we get to 285,000, then what happens?
If it goes to that levels, and by the way, I also think it's more likely that it goes to 250 or 300k levels than 100k, because it is consistent with thinking that we're halfway into this cycle. We did 5x from, when Bitcoin was 10k, we're now at 50k plus something. So that's 5x. So the jump to 100k is so small compared to what we already have. So another 5x takes us there, right? So yeah, well, one thing, the 288,000 is an average. So to have that average over the 4-year period, we have to be far above that, because right now we're far below that. So I think actually, if this scenario plays out, that we could see prices of 400, 500,000, and then after that, a bear market that could go as low as, well, maybe 100 to 200,000 again. So break all models, and there will not be cycles anymore. No bear market, or at least a less deep bear market. But I don't think that's true. I like you said, I think there will be FOMO at the top, and there will be fear after it, because something happens, and the new people that FOMO'd in, they will be scared and they will sell. And of course, the minus 80% drops are always measured from the very top, right? One thing that Satoshi Nakamoto always mentioned, and basically the reason why he invented Bitcoin, and all the people before him were trying to make something like Bitcoin, it was the debasement of currencies, the debasement of the dollar. Now, that was the main cause of the main problem that Satoshi Nakamoto saw, and that Bitcoin was the solution for. Because as long as there has been fiat money and governments, even as far back as the Romans, the governments debased their money and stole money from the population. I think if Satoshi would see today what the government is doing after the COVID crisis, with the trillions and trillions of dollars in stimulus and quantitative easing, he would have laughed and seen, yeah, well, this is exactly what Bitcoin is made for, and you see it playing out beautifully. So